How's it going, everybody? My name's Antonio, and today I have Jordan Trimble on the barbecue to grill him about SkyHarbour Resources, which is a uranium exploration and prospect generating company with multiple assets in the Athabasca Basin, which is in northern Saskatchewan. Who isn't present here today, though, is your financial advisor. This is a conversation that's general and impersonal in nature, and one that will include a lot of forward-looking statements and just talks about uncertain events that may or may not take place. The minimum risk of investing in anything mentioned in this conversation is 100% loss of capital, which means that if you don't like losing money, you shouldn't take any investment advice or any investment decisions based on this conversation alone. You should further your research by using the links in the description of this video that will lead you to the company's website. And also make sure to use the official documents provided by the oldest website on the planet, which is setter.com. I also want you to know that companies featured on the barbecue often do pay for the production of these interviews, but they don't get access to the questions up front or anything like that. But it is a fair disclaimer, so I do want you to know that. That all said, though, SkyHarbour is the, at the time of recording of this video, is a 55 million Canadian dollars market cap company that is spread across about 160 million shares outstanding, which makes it a 35-cent stock, trading on a TSX Ventures Exchange under ticker symbol SYH. Fully diluted, we're talking about 190 million shares here, and I'm also seeing roughly 4 million Canadian dollars in cash as of the last reporting. Most notable shareholders here would be Denison, which owns about 7% of the company, and Rio Tinto, which owns about 2% of the company. There's also been recent insider buying. Jordan himself just sort of nibbles away at the stock on the open market, which I do like. SkyHarbour, this is an interesting company. It's an interesting situation because they have no fewer than 24 uranium prospects in the Athabasca Basin, spanning over 500,000 hectares. So this is 500,000 hectares plus. So they have 8 partnerships going on in the prospect generator side of the business. And considering that all those partnership agreements get executed, which we don't know yet, but if they did, that would total to over $85 million in combined value. That's going to be split between roughly $38 million in exploration expenses, $20 million in cash payments, and over $28 million in shares and options. 10 of the projects that SkyHarbour owns are drill ready, 4 or 5 of which are likely to get drilled this year. And there currently is a 10,000 meter drilling program ongoing at their Russell Lake project, which, by the way, is a Rio Tinto partnership. And the project is also next door to the Denison's Wheeler River project. Other than that, the Moore Uranium Project is the most advanced project that the company has, and it's somewhat of a it was basically their flagship asset, which they bought from Denison in 2016, and they now hold 100% interest in that in the project. That is, by the way, a large project itself. It's totally almost 36,000 hectares, and there is an NI 43-101 resource estimate being planned for later this year. So that's going to be an interesting one to see what's going to be coming out of there. The project is also located close to Cameco's Key Lake mine and mill operation. So in terms of infrastructure, that should be okay. Not too far off from the Cameco's McArthur River mine either. And I'm hoping Jordan will tell us more about this project, but because it's been, they've had a couple of good holes there. So there's like 4% over 10 meters. There's 5% over 6 meters, which those are good grades, you know, just for curiosity. I know we're not supposed to do that, but if you equate 4% of uranium over 10 meters to gold equivalent grades, again, I know we're not supposed to do that, and that's not representative, but if we were to be rascals and do that just for fun, that would be an almost 560 gram meter hole. So it is high grade, but there's also lower grade intercepts in there that I do want to talk about here and see how Jordan looks at it. And yeah, I'm not going to go over all of their projects because nobody wants to hear my voice for that long, not even my wife. So that all said, Jordan, thank you for investing in time in me, sir.
Yeah, no, I appreciate you having me on, and I'm very impressed. You've covered a lot of talking points there, so you're making my job a lot easier.
What did I miss in it, though?
No, you covered most of the salient points, but yeah, there's lots to unpack with the company. A lot going on, as you pointed out. I think hopefully one of the key takeaways from this is just the next 12 to 24 months for the company is going to be a very catalyst rich period, given the work that we're doing at our both of our co-flagship projects, obviously the 10,000 meter drill program at Russell Lake is of utmost importance, and will provide lots of news flow over the coming months. And we're this ongoing 10,000 meters. That's a multi-phase program. And then the resource estimate and future drilling at the adjacent Moore Lake project, which you highlighted, has some very, very high grade, notable intercepts. That the highest grade zone that we've intersected there was over 20% U3O8, over 1.5 meters. And one exciting part of that project too, going forward, is the potential for new discoveries in the basement rocks. We've had some success in recent years at Moore Lake, drilling a little bit deeper into these underlying basement rocks, looking for the feeder zones for the high grade that's hosted at the unconformity and in the sandstone. And in late 2021, early 2022, we announced a 7% U3O8 zone over 2 meters, which represented our highest grade basement hosted mineralization discovered at the project. So collectively, Russell and Moore Lake, which are adjacent, you pointed out that they're strategically located just south of McArthur River, northeast of the Key Lake Mill. The road that services the McArthur River mine, that services it from the Key Lake Mill, runs up through the western claims of Russell Lake. You've got power lines there. We've got a camp now at Russell Lake, which we can stage out of for both drilling at Russell and Moore Lake. So those two projects represent the flagship assets of the company, and really where we're spending most of our money. But as you pointed out too, we also act as a prospect generator, and we have now 8 partner companies signed up, in 2 of which are now formal joint ventures, and 6 are still actively earning in. And collectively, all of these 8 partner companies, and this is across 9 other properties that we have, these option agreements represent over 85 million in total project consideration between exploration expenditures, cash, and share payments coming into SkyHarbour, assuming that these partners all complete their respective earn-ins. So it's a unique model, a hybrid model. We offer that high-grade discovery and exploration in the Athabasca Basin that a lot of investors in junior mining companies are attracted to. We offer that potential for a new meaningful major high-grade deposit to be found. Most of that work is being done, again, at our main projects, but we also offer this prospect generator business, and investors in SkyHarbour do through that get exposure to several other companies, and these companies are actively advancing our secondary and tertiary projects.
There's lots to unpack there, but let's sort of start it off by you helping me understand the earnings model, the business model, really, because normally, I talk to these companies that have 1, 2, 3 projects. When they're small exploration companies, you have all of these things. You say there's $85 million of value. How's that? What would that mean for me as a shareholder? How would you give that back to me? And just more specifically, talk to me to the business model and the way you make money.
Yeah, so it's a great question. We talk a lot about this, and certainly that's this part of the business has become much more interesting for investors in our company, which is great. We don't want to shy away from being an exploration company. That is at our core, that's what we're doing. We're out there looking to emulate the success that other big discoveries and discovery stories have had in recent years, like the next gens, the fissions, the ISOs, the Hathors previously, right? So we are still offering that exposure, big high grade uranium discoveries in the Athabasca Basin. That's really what does excite a lot of shareholders and prospective investors. But the prospect generator business, which really has evolved in our company over in particular the last several years, really came out of having a lot of ground. We've as you pointed out, we've got 24 properties now. We've continued to stake and make additional acquisitions. In fact, we just recently acquired 100% of a more advanced stage exploration project called the South Dufferin project from Denison Mines, and a project that we've kind of had in our crosshairs for a little while. But that will fall into the prospect generator business as we look to now partner that partner up with another company and farm that project out. So the business, the prospect generator business, to answer your question. So, why is it important to shareholders? What do shareholders get out of it, right? Well, first and foremost, and this ties in with our main business of making discoveries, we now have other companies spending their money looking for deposits at these secondary and tertiary projects, right? So we actually now have multiple irons in the fire without having to go raise ridiculous amount of money to systematically explore and develop these other secondary and tertiary projects. The other companies go and do that. They have to fund 100% of the exploration and work at these projects to come during the earn-in part of the option. And so we offer that. If one of these companies has success making a discovery, even though we don't own 100%, likely won't own 100% of the project anymore, we do typically retain a minority interest anywhere between 10 to 30% of the project. So we get the upside there. We will typically, if the project doesn't already have a royalty on it, we will create a standard 2% royalty on the project as well. And we also maintain a fairly large equity shareholding in the company as well. So you're getting exposure to the minority interest in the project post-discovery. Let's say they make one, post the exploration success, as well as potentially a royalty on it, and equity in the company, which, needless to say, if they make a major discovery, that equity position is going to be worth a lot more than it is today. So you can think of it as almost, the term that we've kind of heard bandied around is a bit of a quasi uranium exploration ETF, whereby we're actually, we've got these positions in other companies, and by owning shares in SkyHarbour, investors are getting exposure to other projects that are being advanced, other companies, so that's that part. But it's also worth noting, specifically with the cash and shares and really very much the cash, this is a non-equity dilutive way of us raising capital. We haven't raised a hard dollar in a private placement in almost 3 years. There's very few other mineral exploration companies that can say that, and a part of that has been the money coming in, the cash coming in from these partner companies, and so it's been a good way for us to monetize some of the non-core and secondary projects in the portfolio. And if you look at the schedule of payments expected, right? Again, these companies have to complete their earnings, and they have the option to make these payments. But if you look at the expected schedule of payments coming in and money being spent in exploration on these various projects with these other partner companies, over the next 24 months, assuming that all these companies make good on their earnings, we would receive upwards of 12 million in cash and stock from these various earn-in option partners. So, it's become as I said, it's become a more significant part of our business. I think our shareholder base likes it. They like the hybrid model. It's unique, and it's allowed us to keep the equity dilution in check, but also offer, again, multiple irons in the fire, shots on goal, if you will, whereby it's not just the exploration and the drilling that we're carrying out at our main projects. We also offer exposure to discoveries at some of these other projects that these partner companies are funding. And one last note too, and this is, I think, something that, this is a finer detail, if you will, but I think some investors aren't aware of this, but the way the mineral tenure works in Saskatchewan, so you pointed out, we have 24 projects, over 500,000 hectares or 1.2 million acres of mineral tenure. That's great. It's great to have a large land package. Obviously, that's a very valuable part, an important part of our story. But you have to spend money on these claims to keep them in good standing. There is technically a holding cost. Now, it's not a cash payment to some government organization or anything like that, but you do have to fund exploration and development work at the projects and build up assessment credits on these mineral claims. Otherwise, they lapse. And as the market in recent years has picked up, we can talk about the market a little bit later, but as the market for the uranium market and uranium mining companies have seen a bit of a move higher here in general over the last few years, it was a lot easier to acquire large tracts of land 3 or 4 years ago. It's not really the case anymore. You can't just go out and stake cheaply and acquire these big property packages like you could. So if you're not spending the money on these properties, the mineral tenure, the claims eventually lapse. And so this is also a good way for us to keep these big properties, this big land holding, which is now by acreage, I believe, the third largest mineral tenure holding of any company in northern Saskatchewan. This is a good way for us to keep those mineral claims in good standing versus risking them lapse by not spending the money on them.
But to go back to the money, you said about $12.5 million coming in value potentially. If that comes in, what do you do with that? Do you just keep it on the treasury? Do you put it in short-term T-bills? Do you give it back as dividend? I mean, there's many options. What do you do with it?
Yeah, so that's a good question. I mean, look, we'll make that decision when the time comes, assuming that they make good on the payments, right? They have to complete the earnings. So it's up to 12 million that would be coming in over the next 12 months based off the schedule. And it does, typically these options are backloaded. So a lot of the cash and stock payments in particular come in the latter years, as well as the exploration expenditures. But you highlighted it. We've got just under 38 million in exploration expenditures combined between these 8 partner companies. Most of that, some of that has been spent to date, but most of that is yet to be spent. And then just over 20 million in potential cash payments and about just over 28 in million dollars worth of stock coming in. And again, some of that's already been issued and already been paid, but most of that would still be coming in over the coming years.
Right. And to go back to your exploration activities that you're doing at the Moore project, are you, because you said that you're looking for meaningful discoveries, and I'm trying to figure out what that means, because essentially the way I understood it is that you're mostly looking for sort of satellite deposits that would be helpful to already existing infrastructure and big deposits that are there. So you're, as far as I understand, you're not out there looking for the 150 million pound deposit. Like, you'd be happy if you found it, obviously, but that's not your main goal. Or have I got that?
Yeah, no, look, we are absolutely looking for those 100+ million pound deposits, and we believe that we have the properties that can potentially host those, right? That being said, what we have currently at, for example, Moore Lake, are smaller, higher grade zones of uranium mineralization, and we will have a resource estimate coming out. But we're not just going to be pigeonholed into the home run hit, right? We understand that there's a lot of value that you can unlock from smaller, higher grade deposits. It's not to say that we're just solely focused on that. Absolutely, we want to go out there and deliver a 100+ million pound deposit discovery, but those are rare, right? They're not easy to find. But we think we can also build a lot of value, create a lot of value for shareholders through, as you just pointed out, finding higher grade zones of mineralization, stringing together these zones, and then ultimately, really taking a good, long, hard look at, the economics of it. If you look at Moore Lake, for example, and the Maverick Zone, or several Maverick zones, Maverick Main Zone, Maverick East Zone, and now we're drilling a little bit deeper into the basement rocks there. There's small, high grade zones of uranium mineralization right at the unconformity. Well, what's interesting about that is 2 new mining methods being proposed in the Athabasca, the most topical one right now being ISR, which is what Denison's proposing to mine Phoenix with. Well, you've got a high grade. Phoenix is an incredibly rich high grade deposit, but you look at the type of deposit there. You've got a sandstone hosted deposit straddling the unconformity or near the unconformity. That's at the Maverick zones. That's most of the mineralization that we have there. Is high grade uranium straddling the unconformity, right at the unconformity. So that's something of interest to us to explore a little bit more. Obviously, we don't have a PEA or a pre-feas or feasibility study out, so we can't comment on economics. But it's a relatively shallow, high grade, multiple zones of mineralization. The other interesting mining method, or call it new mining method in the Athabasca Basin, is SABRE, which is a joint venture between Orano and Denison, so two companies that we have partnerships with, and they're looking at mining these high-grade deposits, uranium deposits from surface using borehole technique. And again, this is we don't have, it's proprietary. We don't obviously have any economic numbers that we can talk about, but that is something that would potentially open up these smaller, higher grade deposits, relatively shallow deposits, and deposits in the basin that previously you weren't building a conventional underground mine to get at, now become interesting. So so it's to answer your question, long-winded answer to the question, but bottom line is we're looking for both, right? We're not, we believe that we can add a lot of value, not just going for that home run massive discovery, but also delineating, smaller, higher grade zones of mineralization that also, a lot of times do add up to bigger global resources.
Okay. There's, again, lots to talk about there. Obviously grades matter, and I did highlight a few of them at the beginning, but not all of your grades were in the 100%, not above the hundreds of percentage points. So, right. So some of them are not above 1%. They're like in 0.5%, 0.7, 0.9. And if you look at it being 200 to 300 meters deep, that's not considered super high grade in the basin. Are you looking to add more high grade to that for the resource estimate this year? And where are you going to find it, I guess?
Yeah, no, look, so we're talking about Moore Lake here in the Maverick zones, and at the Maverick deposit, you've got very high grade zones, core zones, and you've typically got other zones surrounding it that are lower grade, right? And so ideally, look, we would we continue drilling there and discover multi-percent, 10+% material over healthy widths. And that's where, I bring up the basement rocks for that very reason, because the basement rocks below those sandstone hosted zones, unconformity hosted zones haven't been explored nearly as much, drill tested nearly as much, right? I mean, and that, that's a whole different discussion, but the methodology and the geological modeling for these deposits has shifted over time, and one of the big ones being looking for basement hosted deposits, and you look at some of the major recent discoveries, right? So what was exciting for us at Moore Lake, and this is now going back into 2017, 2018, was the prospect of eventually drilling and testing these basement hosted zones, which is what we've really done at the project, or have started to do at the project over the last several years, and plan to continue doing that. And again, that's where, to answer your question, we believe there are higher grade zones at depth that will deliver those 5-10% U3O8 zones that can really beef up the number, right? And also, it's worth noting at Maverick, so it's a 5-kilometer long conductive corridor that's only really been systematically drill tested to the unconformity. So not into the basement rocks, but just to the unconformity. It's only really been systematically drill tested for about 3 kilometers. So there's still a lot of potential along strike at the Maverick corridor and regionally at the project. I mean, one of the great things with Moore Lake is it's had a fair bit of historical exploration, but there's about a dozen other regional targets that are mineralized. It's an interesting project in that most uranium exploration properties in the basin, if you go and drill, let's say 10 target areas, right? You're lucky to get 1 or 2 of them, if it's an earlier stage project, that have uranium mineralization in them, right? Moore Lake's the flip side of that, where 8 to 9 out of 10 of these target areas are mineralized. So there's a lot of smoke there. There's a lot of mineralization dispersed throughout the project, and clearly there's the geological events that created the mineralization, that brought the mineralization up to the project, are robust and strong. So we still believe there's a heck of a lot of exploration upside and discovery potential at Moore Lake. We're obviously going to continue. We're planning to continue to test that going forward. We think the resource estimate at this point is it's a good next kind of step for the project. It'll be a good milestone for the company. It'll give us some pounds that pounds in the ground that we can talk about. And also, just as a segue into Russell, because, again, Russell's where we're drilling right now, 10,000 meters. These two projects are adjacent. There's, some similarities geologically. And so, Moore Lake, given that we haven't drilled there and the focus is in the last year and the focus has been at Russell, I think the 43-101 makes a lot of sense. Now at Russell, and just because I don't, want to spend some time on Russell here, given that we have our inaugural 10,000 meter drill program. This is, as you and I have spoken about offline, this was a major transaction that we finalized with Rio Tinto about a year ago now. We really spent the first, call it 6 to 7 months, the latter part of last year, preparing for the drilling that would be coming up, that we're carrying out now at the project. So going through all the historical data, we hired Condor Consulting to aggregate all of that, stitch that all together so we could refine our targets. We also signed an exploration agreement with the English River First Nations. Obviously got the permits to drill. And so, there's a lot that goes into these projects even prior to getting the drill rig there. There's a camp there, as I mentioned earlier, and this is a big asset for us at the project to have that camp. It's a 40-person state-of-the-art exploration camp that Rio installed there about 10 years ago. This actually now, we've through this program, we've been able to get our drill costs below $300 Canadian all in a meter. That's everything, and that's very, very good with the recent cost inflation that we see. A lot of other projects, especially if they're fly-in, fly-out camps and more remote areas of the basin, you're looking at $500 to $600 all in a meter in some cases. So this is a key asset for us. Obviously, very strategic location given the proximity to McArthur, to Key Lake, and then as you pointed out, we basically surround to the north, to the east, and to the south Wheeler River, Denison's flagship project. And in fact, a lot of the target zones or areas that we're testing, including the Fox Lake Trail, which is just to the north, and several other Grayling Zone, several other targets that we are actively drilling and testing right now. These are the extensions, strike extensions of a lot of the uraniferous conductors on Denison's Wheeler River project. And so needless to say, we've talked about, Denison's a large shareholder partner. Dave Cates, their president and CEO, is a director of SkyHarbour. He personally is quite a large shareholder. I think within the director and management group, he's the second largest behind me, and he's added to his position in recent years, as have I. And having that partnership and being able to work with them a little bit on what we're doing at Russell has gone a long way, and we're incredibly pleased with what we're seeing there. I mean, this is, again, this is a project, and I've talked about this in previous interviews, but project that, we were very, very much, fixated on acquiring for a number of reasons we've gone through. But one of the other kind of big talking points here is historically at this project, it's over 70,000 hectares of prime real estate in the eastern side of the Athabasca Basin. But if you look at the historical exploration at the project, it's quite interesting because it's such a big project. You've had a fair bit of historical work and drilling there, but nothing that was systematic, right? You don't really have any real systematic infill drilling or, vectoring in on high grade zones or targets. There are previous drill results where you had, over 3% U3O8 over just under half a meter. So there is clearly there is high grade at the project. It's yet an operator is yet to found a continuous zone of high grade mineralization, and that's what we're looking to do. And we, needless to say, believe there could be multiple deposits and high grade deposits at this project, and that's what we're out there looking to do with a new look at the exploration, a new methodology. Again, previous operators, Rio, Hathor, and others went in there and drilled very widely spaced drill fences, as you would with exploration and kind of more wildcat drilling. But this has now given us the ability to go in there, look at all that data, and really kind of tighten up the drill spacing in certain areas that we know have mineralization, and that's really exciting to us, because that's where you can say, look, like the next drill hole could be the one, right? We're not just out there, wildcatting or drilling pure exploration holes. We are very much, we believe, vectoring in on a new high grade deposit and discovery.
I said that we don't have too much time, but I'm wondering, and I understand sort of, it's close to Denison's flagship project, as you said, and I understand why you wanted to get control over Moore Lake. But what was the reasoning behind Denison selling? Like, why would they sell it to you? How come did you see the potential and they didn't see as much potential?
So this is at Moore Lake with in 2016. Yeah. So no, look. So the Moore Lake acquisition with Denison. Denison, I think it's important to note, Denison's, laser focused obviously on developing Phoenix, right? Mm-hmm. And we are an exploration company. Our team, and this is, I think, probably one of the easiest explanations, right, is our team had worked on Moore Lake, right? It was our geological team, Rick and then Dave Bayard, who's our head geologist, and Christine McKechnie. They've spent most of their careers looking for and finding uranium in the Athabasca Basin, ex-Cameco, very, very capable exploration and geological team based in Saskatoon. But they worked on Moore Lake back in the late 90s, early 2000s. They made the initial discovery at the Maverick Zone. So there was a natural fit for us to come in and take on the project and explore. Like, look, Denison's got a major equity position in SkyHarbour. So if we have success at Moore Lake, they benefit with that equity position. And now moving to Russell, because I get asked the same question on Russell, and Rio Tinto optioning it to us. Rio Tinto is one of the largest diversified mining companies in the world. And again, I think they took a look at our geological team and the fact that we had been exploring at Moore Lake, the adjacent project, and recognize that we have the right ingredients to have success, geological success and discovery success at the project. And we structured it in such a way, as we've talked about offline, where it's a very flexible earn-in option for us, but it also gives Rio Tinto it allows them to maintain upside exposure. They didn't just simply sell it outright. And in fact, initially or previously when we were speaking with them, they wanted to just look to sell it outright. And they recognize that, look, there's a lot of value that could be unlocked here by us and our team over the next several years, and hence what the big equity position that they've taken in the company and the staged earn-in, whereby it may very well end up being a joint venture between us and Rio Tinto.
Okay. It's a good explanation. And so this year it's drilling Russell Lake. Then some of your JV partners are drilling at other projects. But overall, are you happy with where the portfolio is right now, or are you looking to add on, other projects onto it if you have the chance, or what else are you looking to do this year?
We're always actively looking to build out the portfolio. We've been very opportunistic. I mean, hence why we've been able to build it up to where it is today. And over 24 projects, and have projects that fit into the prospect generator business nicely. So we're absolutely always looking at, again, we can think of it as the two main projects being Russell and Moore Lake, and then the other projects typically are we consider to be a part of our prospect generator business. I mean, look, if the market got really hot, and we decided, lower cost capital, decided to raise more money, and we wanted to go and explore some of these secondary projects. We could go and do that, but ideally we have partner companies doing that for us. And so we've got the drill program at Russell, resource estimate and future drilling at Moore Lake. I will just note too, at Russell, we're already planning a second program to follow up on this first one. So that's going to be coming. We'll have news out on that over the coming months in conjunction with the assay results. And we're already planning a follow-up on this. And that program will likely get us to the 51%. That should be enough money spent at the project to get us about $1.5 million more, to get us to the 51% ownership. And then with the partner funded programs, we are expecting news out of Azincourt. They just recently completed a program at East Preston, a drill program at East Preston, making great headway there. That's a joint venture where we have a minority stake in the project. And then we also have Madero Mining. They have to spend money to complete their earn-in this year at Yurchison, expecting potentially a drill program later this year from them. Tisdale Clean Energy, which was the largest option agreement we signed at our South Falcon East project. Now, this project does have an NI 43-101 inferred resource at what's called the Fraser Lakes Zone B deposit, a relatively shallow, lower grade, but shallow deposit of about 7 million pounds of U3O8 at 0.03%. And that's open at depth and along strike. We actually did some drilling there in 2015, and we were discovering higher grade mineralization at depth below the deposit. And so that's something that Tisdale's probably going to follow up on. They're likely it's permitted, it's drill ready. They'll likely be drilling that later this year as well, or early in the new year. And then more recently, we just signed option agreement with North Shore Energy. And now that is subject to their listing and raising money. But assuming they do that, they will be working at that project probably as early as September in October, doing some initial geophysical work, and then following that up with some drilling likely next year. Again, that's fully permitted as well. And so you've got a handful of these option partners that will be drilling and or carrying out fairly substantial exploration programs to basically couple up with what we're doing at Russell and Moore.
And so you have about $4 million in cash, and then you're expecting some money to come in the form of cash, hard dollars itself. Should I understand that as we're not raising money this year, or we don't expect to need to raise money this year? How do you look at it?
Yeah, we don't expect to or need to. Now, all that being said, if there's an opportunity to, let's say, in a better market, right, we would, and we want to be a little more aggressive, add on to already what we have planned at Russell and Moore. We would look to do something, but the plan right now is, we've got the cash, and we've got cash coming in. So there's really no need to right now. And as we talked about, the partner companies are funding at the earn-in option property covered by the properties. They are funding all the exploration at those projects.
What about, I want to focus a little bit on the financials here, because obviously the majority of the money you're spending is going in the ground, which is something I like seeing. But I can also imagine that your G&A is going to be growing as the portfolio is growing to manage all that. Is that, I would assume it's growing, but is it?
Yeah, look, as you bolt on more option and JVs and you expand the portfolio and you got more exploration going on, obviously, your G&A picks up as well. We run a pretty lean and mean operation. We've always, and we keep it flexible, right? Like,
what's the burn rate right now? I'm sorry for interrupting here.
Yeah, it ranges between 100 to 150,000 a month Canadian. Okay. is what it works out to. And so, and like I said, for us, the big thing, we've been around for 10 years now, and so we've seen the good, the bad, and the ugly in the uranium market. And the key thing is look, when you have a booming market, you want to take advantage of that, and your G&A will pick up, and there's more expenses, and you're building more value, but the flip side is obviously in a difficult or more challenging market, and we went through a number of years where it was just that we have the ability to scale it up and scale it down accordingly, right? So yeah, but now with the prospect generator business really kind of evolving into what it's become, pretty much all of that is covered by more than all of it is covered by the expected cash and stock that would be coming in as per the earning schedules.
Okay. Do you expect to make any new hires this year or expand the team in any way?
We've added a couple of new geologists in the recent years. Obviously, as the activity has picked up, we're always looking to create value wherever we can, and if that's new additions, new people on the board or at the management level with the geological team, we will look to do that.
Why I'm asking that is because I see you doing all these interviews. You're everywhere. You're doing a lot of conferences. You're doing a lot of investor outreach, and I can only imagine how many hours you're working. And it's I've really been wondering what is I've been wondering how hard is it to run this business model that you're working with. So maybe you can talk to me to the challenges of that hybrid model where you have your exploration assets, but you have the rather large project generator portfolio. And I mean, operational complexity and resource allocation come to mind in terms of challenges, but what are some other things that are maybe not as obvious to me as challenges, but that you've experienced?
Yeah, no, it's a great question. I mean, look, certainly the business has grown, and it's a lot, it's a lot busier and more active today than it would have been 5 or 6 years ago, especially with the the prospect generator business. We did bring in a full-time senior VP of corporate development just over a year ago, Andrew Ramcharan. He's based in Toronto, and very, very impressive resume. He was the corporate development manager at IAMGOLD. And then prior to that, he worked at SRK and Sprott. At SRK, he worked with a number of uranium companies as well. So he's got experience in the sector. So, that was call it a notable, call it recent addition to our team. And he helps out, as does, several others on our team with, managing these various partner companies, looking for new partner companies, because that's something too that is a potential catalyst coming up in addition to the drilling and all the other news flow we have coming out is new partner companies. We've got, dozen plus other projects that we own 100% of that we haven't optioned yet, that are available for option. But yeah, we have added and expanded on the team to help with that.
Okay. Well, what are some of the main challenges then, more specifically, if you had to, I guess First Nations comes to mind as well. I mean, 24 projects, you must have quite a few communities that you have to be consulting with and meet with on a regular basis. So how's that going?
Yeah. So, look, I mentioned this earlier, we signed an exploration agreement at Russell and Moore Lake with the English River First Nations, and met with them, consulted, engaged with them, and at the other projects, I mean, look, when you go to get the permits, the work permits, right, exploration permits, that's obviously an integral part to getting the permits in a timely manner. And so we've kind of I guess in addition to the previous question, managing the prospect generator and exploration side of the business, we have beefed up our team and consultants in this area as well, because that is becoming obviously a much more important part of the story. And we've been very proactive. Again, I don't think that there aren't that many other exploration companies that have signed formal exploration agreements at their various projects with the First Nations and in the area. So, we very much are on top of that. And going forward, it's going to become a more important and prominent part of these companies and how they get their work done.
All right, and then I also see that you're doing quite a lot of marketing, you're out there, as I mentioned, I don't know how long you're working, probably 14-hour days or whatever, but you're doing a lot of like conferences, you're doing a lot of virtual stuff, you're on interviews. You told me that you're spending about 100 to 150K a month on G&A. What part of that is marketing? How much you're spending in marketing? What are you doing for marketing specifically, and what are you hoping to get out of it?
Yeah, so look, much like this is a big part of the G&A flexibility is, ramping up or down, the marketing. And typically, we find the marketing to be a good use of proceeds, within reason, right? You don't want to be obviously spending, overspending, but you also don't want to be underspending on marketing. There is a fine balance. And a lot of it too is, at least, our strategy with it is, we take a look at the market and the market conditions, and you get a lot more bang for your buck, needless to say, when the markets are good, and you get a lot less bang for your buck when the markets are bad. There's no secret there. But yeah, we are believers in, trying different things. We want to try to reach new audiences. I spend a lot of time on the road, as and at conferences, doing interviews, virtual road shows, real road shows, you name it. However, we can only get in front of so many people doing that, right? And so, we recognize too, there's a place for, digital marketing. We're very active on social media as well. And I think it's an important part of, obviously it's an important part of getting the story out there, but I think it's also, ultimately an important part of the success of these companies. If you've got a good story to tell, and, I think we do, we've really built this company up, and it's we're trading right now, as most of our peers are, near, 52-week lows. Not unusual given the time of year, but this is a good time to really, even though it's can feel like you're banging your head on the wall a little bit. This is a good time to get the story out there, get it in front of as many potential investors as you can, because this is, and I'm putting my money where my mouth is too. This is a good entry point in my mind. There's very, very, very strong a value proposition right here, right now. And we saw this last summer. We saw it the summer before. We've seen these ebbs and these flows. And so I'm a believer in let's get the message, let's get the story out there now, because we truly do believe the value proposition is there right now. And so, yeah, we're active, as we will scale it up and down, but we always want to be getting the story out there.
So you believe it's a good value proposition, and you have been believing that for a while. If I look at the SEDI filing, you just nibble away as a stock at higher prices you've been buying too. The market doesn't seem to agree with you, though. I mean, it seems like the market, although the uranium price is on the move, is still not giving, not you specifically, but just juniors, much of that value. I mean, if you look at where the uranium spot price peaked at 60 something not too long ago, it's not down that much from that. But if you look at your share price, it's down well into the double digits, and not your share price specifically, but all the juniors. And then Cameco's share price is, still moving upwards, decently performing strongly. So why do you think that is? Why are the juniors not yet moved? Why are they not getting any love in this market?
Yeah, no, look, it's a great question, and that's part of the reason I am buying more, because I do think there is a major disconnect, and you pointed it out. There's you look at early 2022, when the uranium price went to $65 a pound, and we were trading where we were trading, as were most of our peers. It was a pretty robust period of time, good volumes, higher share prices. Obviously, that's there's now the flip side of that, where you've got the uranium price. Yes, it's pulled back a little bit, but it's still in the mid 50s. Yet the equity, especially the junior and mid cap equities in the space, have really gotten hit hard, right? And I think there's a number of reasons for that. I mean, look, there's no debate that there's been softer equity market conditions, specifically for mining companies and resource companies in the last year and a half. Cameco does have the benefit of being the go-to name for investors in this sector. And so, any new money coming in, especially institutional money, it's typically starting at Cameco. Now, one of the interesting things going forward here is, I think there that disconnect both with the, call it, broader uranium equity market, and mining companies, the disconnect with the uranium price and the uranium mining equities, that will dissipate in the next, I think, short period of time here. I don't think it can. It's as extreme as it's been, since 2020, in the last, call it the last 3.5, 4 years. And so, it's now, I think the equities are oversold, and I think we'll see a bounce back. But then I do also think that money will start flowing from the larger caps like Cameco into some of the smaller and mid caps. You can see that with some of the ETF rebalancings. You see that too when you've got institutional investors in the Camecos that have done well and take some profits, and they look to recycle that into some of the other names in the space. So there are mechanisms by which I think you will see that extreme valuation gap that has been created. I think that will tighten up here over the coming months. And again, I get back to, and I think this is probably a good way to finish this discussion, is just, I think we got it when you see these pullbacks, right? This isn't the first time that this has happened, and it won't be the last time. And it, funny enough, it's seasonally, it lines up with where it has in previous years. We've seen in previous years, August, September be very strong months for the sector, for the juniors as well, not just the larger cap and mining companies, but for the mid and smaller cap names as well. But I think it's important to get back to the fundamentals for this commodity, for uranium. I mean, I know you're a bull, as I'd assume most of your audience is, and the bull case for uranium right now is the strongest it's ever been since I've been running this company. I'm the most bullish on it I've ever been, and that's what's so intriguing for me right now, looking at the market with these juniors and mid cap names that are trading, at or near 52-week lows, and the uranium price, like, you just look in the last, call it 6 months, you've seen the price ticking higher. That's with very little to no buying from the physical holding company. So it's not like Sprott Physical Trust has been in there moving the market higher. That's a real move higher. That's real price discovery. And I very much believe, like, $55 a pound, I think there's a lot of runway left. You've got a nuclear renaissance underway. You've got this industry that's seen an ongoing resurgence underpinned by 3 main macro trends: electrification, decarbonization, and energy security and independence. You've got a whole slew of geopolitical tailwinds that are likely going to continue driving a higher uranium price. And happy to get into any specifics, but the most notable being Russia, Ukraine, and Russia, as I've said before, has a stranglehold on this industry, representing 10 to 15% of primary uranium mine supply. But the Kazakhs and Uzbeks collectively with Russia, that's over 50% of primary global mine supply. And then in the enrichment and conversion markets, Russia represents anywhere between 30 to 40% of those markets. So the West and Western utilities, as the market is bifurcating, are going to have to be more reliant on Western producers and Western uranium companies. So companies in the basin, companies in the US, companies in Australia will benefit from this. And then, you just, again, we get back to the underlying fundamentals, supply demand fundamentals. You've got a major supply deficit that's been formed over the last 5 to 6 years. So you've got 190 million pounds of annual demand, and we're only producing globally primary mine supplies at about 140 to 145 million pounds. Now, that's been met with secondary supplies and secondary sources of uranium, but those secondary supplies are dwindling. One that's been talked about more recently is underfeeding to overfeeding. That could be a 20 to 30 million pound swing. You've got, you look at just utility inventory, in particular in the US, Utility inventory in the US right now is less than a year and a half. It's usually 2 to 3 years, right? So, this is interesting right now as we enter into a new contracting cycle. And that really is going to be, I think, one of the main drivers for higher uranium prices, the new utility procurement cycle. But this new contracting cycle, if you look at right now, what's happened in the last, call it, year and a half, right? So 2022, you had 125 million pounds of material contracted. Not bad. It's been moving higher over the last few years, up from, sub 70 million several years ago. We already had about 100 and just over 115 million pounds of material contracted year to date, right? So we're well on pace to exceed last year's number, but we're actually now on pace to exceed the replacement rate, which is 180 million pounds of material contracted annually. And when you look at years where that 180 million pound replacement rate is hit, it's usually without fail, you see pretty significant moves in the uranium price, right? And there's just a lot of utility demand, and as we know, they're not as price sensitive as they would be for other commodities, right? The fuel for a nuclear reactor is a very small part of its cost, and so fuel buyers and utility companies will pay up. Their main thing is making sure they have secure long-term supply, that the reactors don't run dry, and so that's where you can see these major moves in the uranium price. So bottom line is we're in an environment right now where there's a confluence of very bullish catalysts and factors at play, and at $55 a pound, I still think there's a lot of runway. With cost inflation, I think you need to see 80-90 plus uranium to as the, call it, equilibrium price going forward, and the fair market value price going forward. I think we'll go well higher than that. But you've got all this confluence of factors that I think is going to drive much higher uranium prices, and you don't have a very saturated equity market yet, and that's another key point. Like, all of the uranium companies combined total to about 40 billion in combined market cap, right? And Cameco and Kazatomprom are over 50% of that, right? So you've got the juniors and the mid caps and others that represent, call it just $20 billion in combined market cap. And so, a little bit of money goes a long way. We've seen that. We have seen that. This isn't just, kind of a pie in the sky idea right now. We saw that in 2021. We saw that in early 2022, when money in capital does flow into the space, goes into the ETFs, goes into the mining equities. They move quickly. And I expect, given the recent pullback and, the anemic market we have right now, I think we'll come out of this very strong over the next 6 to 12 months.
I am very much looking forward to that, because although I'm also paying attention to the improving fundamentals, at the same time, I'm kind of frustrated with the disappearing liquidity and seeing my stocks go down. So from my lens, the whole sector has been continually de-risked while the prices have been falling, which is a great time to be buying. But I would also like to see the stocks in the green at the same time. So there's that. And this has been a good. I know that you almost have to go here, so this has been a good conversation. There's a lot of stuff to be talking about. You have an interesting company. There's lots to be talking about your company specifically and the uranium market. But this was a good first talk. I think I've been through most of the stuff that I wanted to ask for the first call. Is there anything else that you came here hoping to talk about, but I forget to bring up?
Yeah, I was gonna just re-emphasize, look, we all like to see our positions going higher, and you pointed out in the disclaimers, these are higher risk investments, and for there to be that 10, 20, 30x potential, there is obviously a higher level of risk associated with that. But I think it's key to get back to the basics when you do go through these pullbacks and these softer periods, and make sure the thesis is still there. And like I said earlier, I'm I believe in the uranium thesis and as strongly as I've ever believed in it. And I think, SkyHarbour, we're doing all the right things. We're offering investors exposure to that thesis playing out. And as a smaller cap company, and with our business model, we're offering some more leverage to that thesis playing out. So it can be frustrating. Like I said, I've 10 years running the company now. We've seen some really ugly markets, and we've seen some good markets. And I think one final note is that we are now, I can safely say, we are now on the other side of the hill, right? Where we went through a long, drawn out bear market, and yes, there will be pullbacks in this bull market, which is what we're going through right now. But I think the trend will continue moving higher over a period of time, and I do believe there's still a lot of upside left with this market, and we're needless to say very excited to be a part of that and to offer investors and shareholders exposure to that.
Thank you so much, Jordan, for visiting today. I'm already looking forward to our next conversation.
Absolutely, appreciate you taking the time, and we'll catch up soon.